The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, we're about ready to end the first week of the new year on a positive note. We are going to take a look at the DAX, of course, but before we do that, we were going to give the announcement of the Executive of the Year for last year, and I was going to give it to Jamie Dimon for being given his big bonuses after they had to pay $16 billion in fines. But I think we have to give it to John Corzine, the former CEO of MF Global. He was fined $5 million for using $1 billion of customers' funds. I'll let you guys do the math on that one. Such a deal, darling, and they think they don't protect the Wall Street group? Give me a break. Okay, now what we're going to do is we're going to look at the DAX here. As you can see, this is the half-hour chart. It's been in a really tight trading range here for all week, which is pretty much what has been expected. But let's take a look here at the little bit longer time frame. By the way, we're going to have Shane Smolian, one of our favorite guests, on at the half hour from wolftrader.net. He is a specialist, of course, in astro cycles, S&P trading, and most importantly, he does a lot of the work on the Fed juice, and that is very, very interesting work. If we look here at the DAX on the longer term basis, you'll see a really nice ABCD pattern forming at the exact 786 retracement of the high from 2015. You'll notice the three drive pattern that we have there. You can see we have several ratios that expand out to that level. The ratio that you're seeing there, that 1.786, that's pretty close to the 1.618, but still not spot on. But the important thing is that it's right at that 786. So that's the important part on this stack. Now, whether it'll come down from here remains to be seen, but this pattern is certainly complete. You can see two major ABCD patterns completing and at the 786. So this would definitely be considered a Gartley pattern under any stretch of the imagination. And if you have an imagination, you can stretch it just a little bit. I want to switch course here just a little bit. Someone's had a question about something that we hardly ever trade, and that is cotton, the fluff. So we'll take a look at this. This is cotton. We're looking at March cotton here. And as you can see here, we went up yesterday and we made a 1.618 of the September high, and we made a 78% retracement of the high in August. Those were exact numbers, folks, spot on at 75.50. It backed off $2 a pound from that level. We're down below 73.50 right now. So this has the potential for being a pretty bearish pattern. You can see the support line that's been in line since August of last year. It's just had perfect bottoms, all at 78% retracements all the way up, and now we're at this level where it should have some pretty stiff resistance by looking at that level. It should be very, very important to watch it very, very closely. It's something that's really important. The other one, we had this news today. I want to talk just a little bit about gold and silver here. First of all, we'll start off with the silver first because it's the weak sister of the group, and you'll see here that we've the gold line is gold. Okay, you can see gold took out the high from December the 7th, where all we could do with the silver was make a 61% retracement. Even when silver was when gold was rallying strongly above the 1180 area. Yesterday, silver was in a downtrend. It was making lower highs. And last night, it came down and made a 61% retracement. I don't know what it's been this morning because I just updated this a little bit earlier before the jobs report. And we'll see if it's held that level or not. But we'll have to give it a little bit of time. Oh, we got a caller on the line. This is always fun, especially Brent. Are you there?
I am, Larry. How are you today?
How are you, my friend? What can I help you with?
I wanted to wish you, Sarah, and your family the best in 2017.
You too. And are you bored with your retirement, or how's it working out for you?
No, I'm having a great time.
Oh, that's wonderful. I'm glad to hear that.
I had a question for you about silver. I'm sure you watch things, as I do. Last night it's probably about 9 o'clock my time. There was that drop from, it was about 16, in the 1650s down to 1620s. I just wanted your thoughts on that. I thought that was
We were just talking about that. Yeah, we were just talking about that. No, that's a good, because I just posted it into the room, and I think the folks will see it. But I don't know if we got below 1620 this morning on this sell-off that we've had after the report. But you're right, and this has been acting very bearish because we went up to the exact 61% retracement of the December 7th high, and gold was taking that high out. And, all you were doing here in silver was just making, and this is an hourly chart, so it's not a small chart. I mean, this is a lot of trading that goes on here. So silver is still, the weak sister of the group, but gold still gold still has a chance. I'm waiting to see the first $17 retracement in gold to see how it holds that. But silver still looks a little bearish. But as you know, silver can change in a heartbeat and turn to be bullish. So if we can get above 1680, 1690 area per ounce in silver, then it's got a really good chance.
Okay. Well, I'm looking forward to hearing Shane. That's my oldest son's name, so give him my best. And the best to you and Sarah. So you just have a great day, have a great weekend, and you take care, okay?
And to you and Leanne, too, Brent. Thanks for calling in, and hope we have a wonderful year.
All right, same to you. Take care, Larry.
Okay, that's okay. The low has been 1626. Thank you, Mr. P. That's good, because that was a low we were looking at 1620, so it hadn't made a new low yet, so that low has held, which is good. Okay, the next thing we want to do now is to move on. We had another question from one of our callers from Hong Kong, and we will take a look at this. You'll see that as we were talking about last week, we had a really strong bottom coming in here at the 21,500 level. That was a perfect 1.27 expansion of the low from November the 7th, which was the election low. And then we went up and we took out that high by about 10 points. And then we came down really strong, making a perfect ABCD. And as you can see, what we've done now is we've gone up to the 61% retracement at this level of 22,500. I believe that's where it closed in the Hong Kong index last night. So we'll see if that's going to be the case. It's still in a downtrend. As you can see, we've had lower tops from September, October, all the way through this time frame, and that's pretty much what we're looking at right here. We've had a request to take a look at the Japanese yen. The problem is I don't have an updated chart on that, and I'm reluctant to say anything about it given the fact that we've had this report out. I will post it right after the break here, the Japanese yen, 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're going to take a look here at the Japanese yen. As you can see, we had that 1.618 expansion back here about 2 weeks ago. We made a double top up here late last week, and of course we've been well, I was early this week, and we're down a little bit. We're trading at around 116.62 this morning, so not too much. The important thing is that the yen made this beautiful 135 pattern on election night, as you can see there on November the 8th, and it had a tremendous run, you know, from that level. In fact, that was on a dollar amount basis, that was probably one of the bigger moves that we've seen you know, down the road. Now, we've also had a question about someone about wheat in the den here, and I wanted to take a second here just to show you the what's going on in the wheat market. This is, if you'll notice here, that we're making a 61% retracement from the high that we made back on October the 10th. As you notice, that double bottom that we had there, this was the buy that we had in at the 386 level. We only got to the 393 level. We made a slightly lower low than we did on November the 30th. That was the real tip-off. And, of course, the next morning was the real easy buy, because that was the full moon. And, of course, the market took off, the new moon, and the market took off quite a bit from that level. We've rallied about 30 cents, which is a great deal considering that the soybeans rallied about the same amount, but they're a much larger price level. The corn could hardly do anything. So I still think we've got a chance on these grains to back off a little bit more, but then we'll have a little better of a chance to get into this. I want to get into something. I've only got a few minutes here, and I want to cover it because this is where I think all the action is happening in the foreign exchange markets, folks. And we've been watching this a little closely, like we always do. But as you can see here, you'll notice the high that we made in that U.S. dollar was at the 1.618 expansion of the March high and the 1.27 expansion of the January high. You know, that's also a seasonal cycle. And look what's happened here in the last several days. We go up and we made a new high where we took out the highs of the last 2 weeks by about 10 cents, which is almost nothing. That was at 103.80. And then the market has now dropped over 2% in just a matter of a couple days. And it's done it with wide bars and also with a gap that where we gap down a little bit to fill the gap right after the opening. But these are bearish chart candles, folks. So we need to watch this very closely. But on the other hand, if this turns around, you can see a really big move in the U.S. dollar. There is a caveat in the U.S. dollar index now, folks, is because we have the Chinese renminbi. The yuan is also being included, and it's a value of 8%. We have a 46% value of the U.S. dollar. We used to be 53%. We're now down to, I believe, 46 with the Chinese yuan coming in here, and they are manipulating their currency. Watch the level of 9. Right now we're trading at 9.88 RMB. If we get above 9, that's going to be a very, very significant spot. When I first started going to China back in the mid-90s, we were looking at 12 and 13 renminbi to the dollar. We got all the way down to, I believe we hit 5, or no, I don't think we hit 5. I think we got to 6, and now we've rallied back to 9. So watch that very, very closely, because this is going to be interesting what China is doing. But they have there's something wrong with their trade surplus and their foreign exchange debits and credits, so they're trying to fix that. But right now, it is just not working the way that you want to be able to see it. But we did hit major support there in that dollar index at that 101.30 level, as pointed out by some of our really smart people here in the Tiger Den. But this is something to really pay attention. This is real money, folks. This is money that is moving from from one country to another, and also from one Federal Reserve to another Federal Reserve. So this is serious stuff. It is big. I mean, you're talking trillions, not billions. So watch it very, very closely, because it's got a really, really important thing to look at. Now, I wanted to share a chart from one of our listeners that asked us to share it with the folks here. It comes from the Business Insider, and it basically shows what's happened with the retail seasonal hiring, what's been going on there. And that's mainly because of, we're doing so much buying online now that they don't need people in the brick and mortar part of the business. But you can see we're down to levels right at where we were in 2009 at the recession. So they're not doing much hiring in retail. So that's mainly because the computers are taking everything over. So you'll be able to take a look at that. I don't think I'll be able to look at the VIX, but I believe it's trading at around 12. I still like the VIX. I think that's the sleeper of the whole group, because the whole world is very, very bullish now. And, well, not the whole world, because the emerging markets and some of the Asian markets still look pretty bad. But the VIX is a insurance policy against something adversely happening. And I think it's a chance. I don't think we're going to make new lows below 10, but and it's got a potential, because once the VIX moves, folks, as you know, it moves exponentially. That's a heck of a way to to pick up some fast money when you're right, and when you're wrong, you give it back. So you got to be really careful there to make sure. But we're down amongst major support here, as I focused in the newsletter this past week, that on the weekly basis, we're down near where we were, back in 2006 and 2005, before we were making our top, that went into the 2007 level. So this is going to be interesting to see. What someone just mentioned here, that it's trading at 11.34. I do not have a position in the VIX. I just said that the best way to do that would be to buy a far out call, and with the strike price of about 15, I believe. And I think at that time you could have bought it for it was very, very cheap, and I'm sure it's lost some of its premium since that time, but it's still valid all the way through May. So whether that's going to work or not, we'll have to wait and see, but we'll give it a pretty good idea here to look at. The question someone has posed me is about a big bull market in the grain markets. Of course, that's possible, because, we have very little supply. We have about a 6 or 7 month supply on a worldwide basis. So any problem in any major country, like Europe or South America or the United States, brings in a great deal of buying, because there's very little overall supply really out there for a really long period of time, and that's why the grain markets always have that potential. The same thing, with the oil market. And one of the questions people are asking this morning is about the oil. We went up to that 55 level. We backed off 6%. We're now trading around the $54 barrel. If we can get this thing above $55 a barrel, it has legs to get to 64. But frankly, right now it's got a great deal of resistance, as we pointed out in the heating oil and also in the crude oil. The fact that it had so much resistance at that level of $55 a barrel. When you go up to those old highs and you can't punch through, that's a bad sign. Stay tuned for Shane Smolian at wolftrader.net. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we have Shane Smolian of wolftrader.net on the line, I believe. Shane, are you there?
Hey, Larry, how are you today?
I am very good. Happy New Year to you and your family.
Happy New Year to you, too.
Okay, buddy. We'll start out here with your weekly Fed, or I think it's called the Fed Juice Weekly. Did you want to start with that chart?
There's one right above it that said that the oil one. If we could start with that.
Oh, I missed that one. Shut the front door. There we go. Just a second here. This is interesting because I have a really strong interest in the oil. So give me a second here, and we'll post this in. Where did this come from? What was the
This is
source of
actually
this?
from this morning's edition of the Wall Street Journal. I go through that every morning, but I thought this was an interesting graph,
Wow.
and it actually shows the difference here between the long positions and the short positions in oil. And we're reaching a spread now that we haven't seen since 2014, 2013. Even in the 2015 top, we didn't see this type of a spread. So I think oil could be at a dangerous level here for speculators. And in the bottom chart there on the bottom right, it talks about the oil rig count, which is increasing, which is basically a function of supply. That together with the fact that we're at the peak of a solar cycle right now. I post this in the newsletter. Anybody who gets the newsletter would see this. But we post cycles for all the different commodities too. But I think oil is that it kind of could be at a tipping point here. So I just wanted to show people that this is kind of a dangerous level for oil here in terms of the sentiment, and also we're at the peak of a solar cycle right now. So it could show some declines from here.
Well, this is really, really important because we were discussing that earlier in the show, but I really like that. That's a really good. I haven't looked at the Wall Street Journal, I think, since Volcker was the chairman of the Fed. So anyway, my hat's off to you.
Well, I like the Wall Street Journal, just to get updated on the headlines. But they have something called Wall Street Journal Graphics, and they have some beautiful graphs. That I recommend anybody to take a look at those on a daily basis.
Wow, I didn't realize. I'll have to take a look at that. So let's take a look at this Fed Juice Weekly because, boy, you've been spot on about the Fed juice. So is there any chance that their juicer's going to run out of electricity?
Well, I don't think so. I mean, from what I can see here, the Fed juice is alive and well. You can see this pink line at the bottom. This is the actual Fed juice on a weekly time frame. And that peak on the left side, that was the peak after the QE3, and then they started pulling it back, and then the market collapsed there into the 2015. We started having all these problems, and then they ramped it back up again. So we essentially have quantitative easing going on behind the scenes, and I have a very strong case for that. I posted the data provided by the Fed. They posted it's public information. They're still purchasing upwards of $500 billion a year in mortgage-backed securities and treasuries. I mean, that's publicly posted information. So this is not just some speculation on my part. I actually post their data. I posted it in the last newsletter last month, and it's happening, guys. This is a real thing. This is not just some theory. They're actually still purchasing this like it's a QE time, and they're not really telling people about it. And they're telling people about it, but then they don't put it on their balance sheet, which I find strange. And that's the next picture that I posted.
This is the Fed balance sheet picture. Okay. There you go. Shane, someone's asked a question about the M1 and M2 numbers. Do those have any effect? I mean, years ago, we used to live and die by those every day at 1 o'clock in California. So do they follow M1 and M2 anymore? I mean,
I think they took one of them off. I think the M3 was taken off now. But, the main thing now, since they're actually accumulating money on their balance sheets, I think the balance sheet is the thing to look at. In essence, the velocity of money they are trying to increase it, consistently on a monthly period, and they're not really having that much success in terms of it getting into the actual economy. It's getting into the stock market, but not into the lending. Now, this is interesting. I posted this last month. This is from the actual balance sheet of the Fed. So I read their quarterly balance sheets, and on the one hand, they're telling you every day that they're making all these purchases of the mortgage-backed securities, and they're doing all this lending. And on the other hand, it's not reflected here on the balance sheet. And so there's a contradiction here. So most people who don't do their due diligence would maybe go to this chart on the quarterly and say, well, the Fed balance sheet is flat. It hasn't increased. But in reality, if you looked at this, it shows it at about $4.5 trillion right now. But it's been increasing at a rate of about $500 billion a year. So that's probably up around $6 trillion right now, $6.5 trillion if you actually projected those numbers out. And so I still can't understand why there's this contradiction. And they're not selling off securities. It's not like they're buying and selling them off like Operation Twist. They're not selling anything. They're just accumulating these. So notice on the left-hand side, it says selected assets, selected. So I don't know what's going on here, but I read all the quarterly reports. I follow the daily data given out. There's a lot of talk. Trump was talking with Rand Paul was talking about a bill to actually audit the Fed. And you guys really don't need to audit the Fed. They're telling you what they're doing. I mean, it's amazing to me how they want to do all this auditing, but they're actually telling you what they're doing. They're actually on a daily basis. If you would just look at the numbers that they're putting out, you can see what they're doing. You don't need to audit the Fed. They're telling you what they're doing. Now, in terms of lending to foreign entities and all of this strange stuff that went on, or the swaps that happened, they swapped a lot of foreign currencies during the 2008 crisis. Yeah, maybe if they audit the Fed, they would see strange shenanigans like that. But in terms of the actual balance sheet and what they're doing, the Fed is telling you guys what they're doing. It's just people don't even take the first step to even look at it. I mean, you can see it. The information is there for you to look at.
Wow. Okay, you want to go to the master signal?
Sure.
Okay, we'll do that one next. Okay, it's ready.
Okay, so this is a signal that we've created. It's basically a pairs trade between the SPY and the Fed juice. And it's so accurate that we've actually made this our primary trading signal in terms of a one-day signal. And I think this controls about 70 to 90% of the market. I changed my focus this month in the newsletter saying, look, the Fed is the market. That's the reality. At least right now, it's been like that since 2009. And so this is really the signal that we watch. And every time this thing turns down, the market turns down. And so right now we're in a phase where it's in a down period. So the market's going to struggle until this thing turns up. The market's going to struggle. So without the Fed, the market can't do anything. And I can prove this. I can provide. I can go back to 2009. It's almost without exception. Whatever the Fed does, that's what the market does. Now, the astrology stuff does give you a background context. I mean, it's important to know, like, okay, this is a generally bullish period, or we can time the buy points. Like if we're looking to buy the market, we can time it. But in general, this is really what controls the market. So I post this to subscribers in the newsletter, and I also post it on a daily basis for our full service, the Twitter service. This is posted on a daily basis so people can keep up with what the Fed is doing. So it's very important. I mean, this is the market. Like if the Fed doesn't support the market, it's not going up, period. Like this is just there's no exception to this. And so this is the daily chart that we use to trade off of. If the Fed juice is in a sell, our bias generally in the negative direction.
Okay, we got to take a break here. Stay with us, folks.
Sure.
We'll be right back with Shane Smullian of wolftrader.net.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays. We broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with hosts Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
I think we have a caller from Dallas, Texas. Kenner, are you there?
Yeah, how you doing this morning?
Very good. Go ahead, Shane. We've got a caller named Kenner from Dallas, Texas, the home of the Cowboys.
Go ahead.
Go ahead,
Hey,
Kenner.
Shane, you showed that wonderful graph, but I don't understand your legends. I'm sure I'm not the only one. You got an SE and an LE, I think. One is red and one is blue. And I don't understand what I'm looking at. Could you show that again and explain it?
Sure. Okay. This is let's go back to that chart. So this is a pairs trade between the Fed juice and the SPY. So we've actually made this into a trading signal. And so when if the market gets strong in relation to the Fed juice, it can go into a buy. But it's a combination, a blend of the two. So the SCs are short entries; these will be trades, and the LE is a long entry. So now this chart is actually a static chart. We actually use this on what's called a walk forward technology. So the actual buy signal, this is a current signal. The actual buy signal came right near that bottom in November, and it went long all the way until that December 19th area, and that's when it generated the sell signal. So this is actually a trading signal that we've created from the Fed juice. In other words, we've taken the Fed juice, we've taken the SPY, we made a pairs trade between the two because they track each other, just like you would between like Google and Apple, a pairs trade. You would trade you would buy the stronger one and sell the weaker one, and then we're able to tell the direction of the market based upon this indicator. So the indicator tells us where the market's going to go, basically.
So down on the left-hand side, you've got one that looks like it's got an SE with a 1 on it, and it's got a red line, then it goes to a green dotted line, goes all the way up to an SE up on the top end.
Correct.
Now, in the chart that Larry's showing, you can't see the legends along the bottom, so you can't get a reference point on what those reference to.
Okay, so go ahead, Larry.
If you drop me an email, Kenner, I'll send you the charts for today.
Okay, I just wanted to understand them.
Okay, go ahead.
This is the SPY. This is okay. So it's kind of hard to see on the stream here, but this is the SPY on the top. This is the S&P, the SPY, and on the bottom down there. Oh, I see. You can't see it. Okay, it's on the show. You can't see it, but it's actually down there. That's October, November, December, in 2017. So Larry, could you scroll up just a little bit? Is there any way you can maybe scroll it up?
You want to see the dates to show the dates?
Yeah, he's trying to see the dates down there.
Okay.
Yeah, because you can't reference what you're looking at.
Yeah.
How's that?
No, still not. There it is.
That's
yeah,
better. Thank you.
There you go. Yeah, so this is a daily signal. This is the SPY on a daily signal. And so we're able to actually combine these two to get a directional analysis of the SPY. And it's amazing. It's very accurate. I mean, and the fact that we put this walk forward, the walk forward technology, what it does is it's constantly learning. It's on a learning curve all the time. So there's ratios that are slightly adjusted on a weekly basis to give us the best outcome of this. So the chart you're looking at right here, it's current. It made that sell signal on the 19th, but actually, when we did the walk forward back, it made the buy signal right near that bottom in November. It actually picked that up. Actually went into a buy before the market started to rally. I just took this snapshot of the recent numbers. So this is it is very accurate. I mean, I use the Astro. I believe in the Astro. It's a real thing in terms of big picture, but this has just come into the scene since 2009, and it's literally dominating the market. Like, this is the market. So I made this on my primary focus this month on the newsletter. I actually talked about it, and I made all the cycles we focused on. The Fed juice actually has a cycle. It has its own cycle, like an annual cycle, like the market. And so we post that on the newsletter too, to give an idea, because the Fed they're kind of predictable actually with the juice. What they do, they're on it's on their own kind of predictable cycle, and it's an annual thing. They run it up before the end of the quarter, and then right at the end of the quarter, they drop it off. So you notice, if you go back and look at the market from 2009 to current, pretty much at the end of every quarter, I think drops off. Like last January, we had that sell off. That's when they dropped the juice. So it's not a coincidence that this is happening. We're tracking these numbers, and the minute they drop the juice, the market drops. So it's a very tightly correlated phenomenon.
That's really cool. And like the current SE, there has been no new signal. It's basically still in the sell mode at this point.
Correct. And you can see the nice thing I like about this is I made this on a pairs trade. It's a pretty simple indicator. You can see that spread there is still pretty wide on it. Right, it's still pretty wide. And if we looked at the Astro cycles, since when the presidential election occurs and there's a change of power, typically the market goes down about 3% from November to January to the actual inauguration. And so this is consistent with that. So it's basically showing that we're in this period where the market's struggling. Now, there could be some jogs up or down in there. There could be a little bounce. But in general, to me, this is saying this market, it's going to struggle to go up until the Fed starts supporting it again.
Well, thank you very much. I just didn't understand what we're looking at, and I thought, well, perhaps I'm not the only one. Thank you, Larry, for giving me the time and taking away from your schedule. Appreciate it. And
this is great. This is what we like to hear, because the better the explanation, we all learn from Shane's information. So do you want to go on to the planetary index, Shane?
Sure. And I would encourage anybody.
Thank you, Shane.
Thank you, Kenner. And, if anybody has any questions, I do my best to answer all emails to anybody. So if you have any questions, if you don't want to join, you just have a question. If you want to join, if you don't know about the service, just write me and I'll answer the questions the best that I can. And so, that's always there. So Shane@wolftrader.net. Please feel free to drop me a line if you have any questions. I will do my best at least to answer the questions.
Okay, we're looking at the planetary speed index.
Okay, so I don't see it. I see the book there.
Oh, you're joking.
There we go. Okay.
Oh, you got it? Okay, great. Okay,
so this is the planetary speed index, and is this important? Yeah, I think it is important in the context of the Fed. I mean, the Fed is strong, but the planetary speed index is strong this year too. So, even though we're in a period now where the Fed juice is weak, just temporarily, overall the Fed juice is still strong. And this speed index, the fact that this is going up, I would think this is a bullish year for the S&P. I mean, when you take the context of the Fed and then you take the planetary information here, they're both going up, at least until June. I mean, at least until the first half of the year, it looks extremely bullish on the big picture. This is the big picture here, but.
Is any of this related to the presidential cycle that we hear about a lot?
No, it's not. This is strictly the speed of the planets. You add them all up together, and it's heavily weighted more towards the closer planets like Mercury and the Moon, or you see those little waves in there. That's the Moon in there. But this has been very accurate. If you go back all the way to 1885, all of the major crashes have correlated with and rallies have correlated with this index. And so, when this is rising, the market tends to rally. And, we went through a negative phase in 2016, and the market held up pretty good because the Fed was there supporting. And so now, from everything I can see here, at least until June or July, this is a strong-looking market. And if you look at other indicators, too, that are completely unrelated, like the Bradley, It's unrelated, and it's also rallying for the first 6 months of 2017. So unless the Fed completely reverses course and stops doing what they're doing, I don't see why this market wouldn't keep going up for the next 6 months. I just can't. I can't see anything unless there's like some major outlier event that occurs. I just think it's a bullish scenario.
Okay, take a little break here. We'll be right back, finishing up with Shane Smolian of WolfTrader.net.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we've got Shane Smolian on the line, and we're looking at a sun-moon lunar cycle. Is that correct?
Sure. Before that, the Bradley was going up, but the idea of the Bradley was that it's supporting the planetary speed index. It's bullish for the 6 months. The sun
Okay.
moon. This is a simple sun moon lunar cycle, which means it's new moon, full moon. It's on that cycle, and this is just for the month of January. And now this isn't the whole picture. In the newsletter, I actually take all these indicators together and make one graph for you to see. So this is an approximate. This is not. But the idea here is that that we had a bottom into here on the 5th, and then it has a little bounce, and then possibly a little rally, and then declining into the inauguration on the 21st. I personally think it's probably a little more bearish than that, based on the Fed juice. I mean, we might have a little jog up, I think today has the potential to be up. We actually had a swing trade on the. We're actually putting out swing trades now on the full service, on the long side. But probably after today, it's probably going to struggle. I mean, given the historical precedent of this, what's going on with the change of power and the fact that the Fed use is still not getting off that bottom, it's probably going to struggle into at least the 20th. And then you could possibly have a rally after that. Even this cycle shows you that right around the 21st, there's some type of a bottom into there where you could have a bump up. But overall, a negative month, I would say.
Okay. Why don't you tell the folks how they can reach you and what you have for your services?
Sure. You can go to the website, www.wolftrader.net. There's a free email list you can sign up for. Now, just to clarify, this is not the newsletter. The newsletter you have to pay for. It's $36 a month. There's a lot of information there for $36 a month, but it's just a newsletter. It's not a trade service. It's not daily trades. If you want the full trades, the day-to-day, minute-to-minute thing, we have a Twitter service that's a full service. So just to clarify that, there's a free list. I will send you periodic updates if I'm on the show or whatnot, but the newsletter is $36 a month, and then the full service on the Twitter, if you want to sign up for that, you can find the information there too.
Shane, thanks for joining us, my friend, and a Happy New Year to you and your family.
Thank you, Larry. Happy New Year. Thanks for the show. Appreciate it.
Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.